Hey everybody, Blair Nightingale here, coming at you. Tampa, out here in muggy, rainy, beautiful Tampa, Florida. Tradeway getting back at it. I've mentioned to you guys, man, we're going to get out there, get some live events on the go sooner than later. Of course, with all the events going on in the world, we've just pivoted like everybody else. You're not doing the live events that we love doing. We actually get to meet so many of you guys, and you guys get to meet us. Well, we've got a big event here in Tampa this weekend, so you're catching me today for Stock Talk Thursday. What's hot? What's not? What's going on in the news? This is your one-stop stock shop. Just to get an overview as we come in to the end of the week. We've got one more trading day. Of course, Friday, we've got another trading day in the week. But we come in, check in, what's going on in these areas. I'm going to give you something hot, something not, and what's going on in the news. Of course, as traders, we care about the chart. What's going on in the chart? You're looking at a chart right now. If you're not really sure what a stock chart is or what we're looking at, remember that we get together every week, 6 p.m. Central Time, okay? Market Monday right here, Facebook, YouTube. You can go to YouTube, see all the backlogged episodes. There are so many episodes there for you to be looking at, diving into, rewatching, being a part of that. So we have taught much of that stuff on those previous broadcasts. So you can check that out. But we look at the chart, we look at the news. Okay, we look at the chart and we look at the news. Now, that's not necessarily the purpose of our conversation today, but I am going to show you some things from the chart, what's hot, what's not. Occasionally, we really just looked at a specific stock. What's something that's doing really well? What's something that is not doing really well? Well, we're going to look at some specific stocks today, besides what you see on the screen right now, which I'm going to comment on in a second. Plus, what's the major news item? Because here at Tradeway, our traders understand that there's a lot of noise out there, and we need to teach them how to sift through the noise. Do you want to make decisions on good intel or bad intel, right? Do we want to deploy our dollars, which some of our coaches talk about our dollars being like employees, workers. Our good friend Myron Golden says the reason we need a job is because our money is unemployed. Learning to trade is learning to employ your dollars, making your money work for you instead of you trading your time for money. So we teach and train our traders how to sift through the noise, good intel to help you send your dollars into the right places, the better places in the market. So that's what we want to look at. But we got to sift through that noise because there's so much financial news. And I've said that to you guys on here many times before. Now, let me pause for a second. If you have any questions as we're going along today, make sure you use that comment box. Put that to good use. This is a time where you get to ask me anything that you want to ask about what we're talking about the markets. You can pop that in the comments. You can also just say hi. Just say hi. Let me know you're here. I can always see when you're in the class, but I can't see who you are. So I would love to hear from you. Say hello. Let me know where you're from, as a lot of our regular watchers do. Of course, I know some of you will be watching on the recording. I always want to say that when we're on here because I haven't forgotten. You are on this as well. Not everybody can watch this right at the time that we're on here. We're on the same time today as we were last week. We're trying out a new time slot. But it's actually 4:30 where I'm at, 3:30 where we're normally at Central Time in Texas. So go ahead, pop a comment in there. You guys always hear me say that. I love to hear from you guys. So you can do that as we go along as well. Okay, so let me just do a quick look. We're not going to do a market minute today, which is something we do on Mondays from time to time, where I really get an opportunity to dive in, look at the stock market, give you an update on what's going on. We're going to do just a little bit on the market today because I want to set this up. You know, we had a Fed report yesterday. Fed, something we've talked about a lot on Market Monday, but we've also talked about it here on Stock Talk Thursday. Big news item yesterday was the Fed. We'll come back to that in a little bit, but the market liked what they had to say. Now, I was telling all the Tradeway students, What do we want to watch for? Well, we got to look at the all-time high. So that dotted line you can see on there, 44.22, is right at the top of this day right here, July 26th. That's the all-time high. What do I mean by all-time high? It's the highest it's been for all time, right? As long as the market's been out, as long as the S&P has existed, this is as high as it's ever been. Now, it closed slightly below that today. We would expect to see some resistance at that level today. And for those who were trading and making some decisions today, that was important for them to know that. So that's where we're at. Things looking strong. We'll get back to that in a little bit here. What do I want to show you today? First thing I want to look at, some of you guys might have heard of a little old company called Robinhood. Now, I've got it pulled up on the screen there right now. Robinhood. Now, Robinhood was in the news, especially with what we call the meme stocks or GameStop, AMC. Some of these companies you may have seen in the news. We've definitely looked at them multiple times here on Stock Talk Thursday because they've been very hot or very not, right? Either way, very is the right word for what we call those meme stocks or the Wall Street bets picks, right? They've gone crazy. Well, right here on this iPhone, whatever device you use, there's a little old company called Robinhood. Now, Robinhood has opened a tremendous amount of brokerage accounts. You say, what is a brokerage account? It is an account for you and me to trade stocks in, right? It's like a bank account that you and I can trade stocks in. Robinhood allows people to open an account on their phone. Doesn't work on a laptop. It's mobile only. Open on their phone, happens very quick, and it's free. It's free to use. Now, of course, if you buy a $10 share, right? Let's say you buy a share of stock, it's $10, it's still going to cost you $10. You got to pay for the share, but you're not going to pay any fees to have Robinhood broker the deal for you. That's why we call them a broker, or more technically a brokerage firm. But really, it's a broker. It's a bank account where you and I can buy stocks, and technology is making it so easy to do this. Now, there are downsides to Robinhood. I'm not going to go into that today, but there's definitely been some issues to how well the customer experience is. It's pretty bare bones. Now, some people might use it, love it. That's fine by me. But we teach our students what brokers really are going to be best for them in our assessment, especially if you're new. Robinhood not being one of those. So I do want to say that. Okay, I do want to say that up front. But it has grown tremendously. Okay, tremendously, because there's a lot of people out there, they want to dip their toes in the water, so to speak. They say, I want to dip my toes in the water. Most people who get into the markets and, quote, dip their toes in the water don't end up really changing their lives a whole lot, don't end up making a whole lot of money. Of course, there are exceptions to all rules, but when you don't really know how to do it, then dipping your toe in the water, it doesn't really make a major impact. That said, they have had a lot of people opening new brokerage accounts. So Robinhood has grown tremendously. Blair, you said this is Stock Talk Thursday, hot, not, and news. Where is this going? We're talking about Robinhood. Well, Robinhood as a company, very hot, very hot. Now I want to show you the stock in a second. They had today what we would call, and this is what I want to cover, an IPO. Okay. Now this stock had 1 day so far of trading. Okay. It opened at $38 and it dropped down at one point as low as $33, as high as $40. So not a huge swing. Okay. A decent swing from high to low, but nothing crazy on this stock. $6 on a $30 stock is significant, but not out of the ordinary for a first day. Now, I mentioned an IPO. This is what I want to cover. Robinhood today traded down, right? It didn't move up. It actually closed lower than it opened. That's why the candlestick is red. So you could say, well, the stock was not very hot. That's true, but the opening price here for Robinhood was pretty strong, okay? This is the very first time that it's been traded, and opening up at almost 38, well, really at $38, is pretty strong for Robinhood. Okay, so what is an IPO? What is an IPO? Remember that what these stocks are. When you and I buy stocks, we're actually buying a share of that company. Now, that company, before it was traded on a public exchange like the New York Stock Exchange, there are several different exchanges, but before you and I can go and buy the shares, the company's private, right? We're not able to buy shares of a company. This is what's so amazing about the business opportunity, the investment opportunity, the financial opportunity, trading stocks, because it gives you and me the ability to participate in the growth of the best companies in the world. And all the infrastructure we need to do it is already in place. We need to go on our phone and we can do it. We can do it on our laptop. We can do it from anywhere. We just need a data connection, right? And our phones, they're always on data, right? We've always got access to the market. So a company like Robinhood says, well, we have this company, it's growing, but we would like to go public. We would like to take the company public, which means we're going to open ourselves up to public ownership. It's not only going to be a privately owned company anymore. And shares of the company, which each share is just a little piece of ownership in the company, we are going to distribute those to the stock exchange. Now, there's a bit that goes on behind the scenes to make that happen, how Robinhood gets paid for doing that, because obviously they're selling a huge portion of their company to be traded on the open exchange. But what I want you to know today is an IPO. If you ever hear that, if you're a note taker, you can write this down. An IPO is an initial public offering, meaning we're offering the company or shares of it to the public. And this is the first or initial time we've ever done it, right? Initial public offering. Instead of saying the whole thing every time, IPO. Today was Robinhood's IPO. Today was Robinhood's IPO. And so you only see the one candlestick. So very interesting seeing Robinhood show up on the exchange. Now, we talk about how, when, and why we make trades. We don't just buy things based on news, based on a hunch, based on a feeling. Guessing, gambling, or going for it is not trading. We want to employ a specific system of trading to let us know, here's when I should buy it, here's when I should sell it. I think if I go to this guy, you can see here's a pattern, right? Here's a very clear pattern. It moves up and down. You say, Blair, it moved out here. Well, look at this little guy down here, earnings. So that's what created the change in the pattern. And we teach you all about what this guy down here means for you as a trader. But what I want you to focus on is how clear and clean that pattern is. That's what helps us know, when do I get in? When do I get out? You can draw two lines. If you can draw two lines on a chart, you can be a stock trader. Somebody out there probably didn't know that. If I can draw two lines, I can be a stock trader. I can't draw lines on Robinhood. There's not enough. There's no pattern. There's nothing happening yet. You say, well, Blair, I actually want to buy Robinhood because I think it's going to go up. Well, that's fine. That's a speculation based on what you think is going to happen. But you're not trading a pattern. You're not following the behavior of the big money because you haven't seen what it is yet, okay? But Robinhood getting an impressive IPO today, now that we know what an IPO is. And for that reason, I'm highlighting Robinhood today as hot. Just a reminder, anytime I say hot or not, I'm not necessarily saying run out and buy the stock right now. In fact, I just said I don't see a pattern here. So I'm not buying Robinhood. And if it was dropping significantly, now it obviously moved down today, but if a stock is on the not list, that doesn't necessarily mean it's going to zero, right? It doesn't necessarily mean it's going to continue to get killed, but there's a specific reason of why it's not hot, and that's why I choose it and want to bring that out to you so you can hear or learn what is happening. happening. Okay, so that's Robinhood. The next one I want to show you here, remember I just highlighted, let's go back here for a second. I just highlighted this guy right down here, right? That's the software letting me know that CLF reported corporate earnings. Now remember, every company has to report earnings 4 times a year. It's a quarterly earnings report. That means once every 3 months, they are reporting earnings. So how important is that? Well, it's very important to you and I as traders. Here is one of the reasons that I want to highlight for you how important it is. PayPal. Now, before I go to this chart here, you're going to notice that there's a pretty significant change that occurs as a result of earnings. Earnings really comes in a season, by the way. Some stocks will report their earnings outside of the season when most stocks report, but really we get into a couple of weeks where almost all these public companies are releasing their earnings at the same time. So it tends to come and go in seasons where earnings really crank up, and we see a lot of that. Well, we're in that right now. A lot of companies reporting earnings. They report before the bell, meaning before the market opens, and they report after. And that's important for you and I to know as traders, because these can be really significant events that affect the price, right? Think about it. The company makes an announcement saying, this is what our earnings is. This is how well we did this quarter. And it's happening before or after the market. So you and I can't buy and sell while this information is coming out, okay? Really, that has a huge impact on what kind of action we can take when this information comes out. So let's go over to PayPal. Look what happened to PayPal, okay? So PayPal is in this not too shabby of a pattern, okay? It comes down, hits this white line, back up, hits this white line. It's moving back up. It's doing what it's been doing. There is a pattern in play. See these peaks and valleys, I like to call them. But we've got this tricky little guy down here, earnings, okay? Now what's interesting is they actually made more money in their earnings report than Wall Street expected them to make. But what happened to the stock? It went down. It went down significantly. It lost almost $20. In fact, it did. It lost $20 a share. Okay. So that is a significant thing. Looking at PayPal today, was it hot? No, it wasn't hot. Even though earnings beat, that's how we would say that, right? If they make more on revenue, their earnings per share, they call it, is higher than what Wall Street thought it was. They had really great earnings in this last quarter, and yet they still sold the stock off, which means that there was something reported in there that Wall Street didn't like. Now, how do I simplify this for us as traders? You have to know the rules that we have at Tradeway around earnings, because you want to protect your money. You want to protect your money. You never want to guess, gamble, or go for it. You want to protect your money around earnings. So we have special rules that help us navigate that so that you don't ever end up in a situation where you have a stock that drops down like PayPal did today. Okay, PayPal not hot at all, even though the earnings beat, right? There's a story of when Apple, this is years ago now, Apple made significantly more money than they were expected to make. But as they also reported earnings, they said, but, we sold less iPhones than we thought. We made some money, but we sold less iPhones than we thought we would. And the stock tanked, okay? So we don't guess, we don't gamble, we don't go for it. And earnings presents an opportunity to do all of those things. So we just don't do it. This is what happened to PayPal. And there's a lot of other stocks out there that are reporting earnings. Now, somebody might be thinking, well, wait a second, Blair. What if the stock didn't drop? What if the stock went the other way? What if I was looking at this? Right? What if that's what it did? Well, that does happen. That does happen. The problem is that you and I have no idea No idea what's going to happen. And it either results 50-50 in major losses or a major win. And that's gambling. That's not trading. That is not only to say PayPal's not hot today, but that approach to trading is not hot. In fact, it's that kind of gambling that gets most of those people, if I can say this, that dip their toe in the water. These are the kinds of things that they get sucked into, and they don't end up staying in the market for very long, because guessing, gambling, or going for it is not a recipe for long-term stability as a trader. And what you want as a trader is to be in the market over time. You want to actually be moving towards your financial goals and seeing them change your situation. That's what you want to be seeing. That's where we're at on PayPal. Now, heading back to the S&P, making sure we don't have any questions. I don't see any questions there. As we look to this right here, I mentioned yesterday we had the Fed. Now, we've talked, as I said, about the Fed on here pretty extensively in episodes past. The Fed, meaning the federal bank. And the main thing we need to know is that the federal bank controls interest rates. How much interest is going to be charged on borrowed money? Okay, this is what they set. And it really trickles down. It trickles down to what people are paying for financing on their home, loans, credit cards, all kinds of stuff can be affected by that rate. When the Fed keeps that rate low, it means interest rates are low, which means that borrowing money is fairly cheap for people. And they're near zero right now at the federal funds rate, right? That's the term that we use. Those interest rates are very low, but they're talking about raising them. And I've gone into this multiple times before, so I'm not going to go through the whole story of what that means today. Like I said, you can always go back and watch some of those previous episodes where we specifically looked at the Fed. I highly recommend you go back and watch that, because it's a very helpful thing for people as traders to be aware of. I was aware of what was happening with the Fed report yesterday, and that actually opened up some opportunities for me as a trader yesterday as that news came out. So that was very good for me to have an understanding of how to do that. So I would definitely recommend that you do go back and watch that episode. Now, what I want to say about the news today is it was really mixed. Now, the Fed report, in short, yesterday was positive. They said, we see inflation and we don't think it's bad. In fact, we think it's going to pass away. By the way, inflation's going up. Have you noticed things around you are just getting more expensive? Products, goods, services, gas, it's all going up. That's inflation. The price is going up. Your dollars are not buying the same amount of what it was buying because things are getting more expensive. The Fed doesn't want that to get out of control. They want to be able to control that. Interest rates is one of the ways that they do that. The market is interested in knowing, where are we going with interest rates? Because the market likes cheap money, right? You and I would like to borrow money for 0% interest, wouldn't we? I mean, that'd be nice if everything you borrowed was paid back with very, very little interest. You might be willing to borrow some more money than normal if that was the case. Well, that's how Wall Street feels about it. So then they pump money into the stock market as long as money is cheap, because they expect things to continue to grow. The Fed said, we expect things to continue to grow. We plan to keep the money cheap, right? Borrowing money cheap. And we think that the concern you have, Wall Street, about inflation, you don't really need to be concerned, because it's going to pass. It's going to pass. Now, some people on Wall Street don't buy that, but this is what the Fed said. Today, the market was happy with that. GDP, right? Our gross domestic product, what we really were able to produce, right? It was significantly lower than what the experts on Wall Street expected it to be. Also, another thing, unemployment numbers. How many people out there where you live, you've walked around and you see a lot of help wanted signs? Now, this depends probably on where you live in the country, but you see a lot of help wanted signs. There's a lot of companies right now wanting to get people back to work, but people aren't coming back to work. Some people are afraid to go back to work. Some people are making money on unemployment, more on unemployment than they're making at whatever job they can go to, right? This is creating an issue. We're not seeing as many people. We still have twice as many people on unemployment benefits as we did pre-pandemic. That's a lot of people considering most of the nation has reopened. So that was some bad news. So we got a little bit of headwind, a little bit of tailwind today, but ultimately the good news won out. So what you need to watch in the future, right, as we go forward from here on news is which of these starts to dominate the narrative? Which do we see in the headline in the morning? There's going to be so many articles. I really just want to look and see, does Wall Street feel optimistic about the future of the economy? Or do they start to fixate and focus on, man, our GDP was lower than we thought. Man, people aren't going back to work. That doesn't sound good, right? Inflation is going up. We don't think the Fed's right. We don't think it's going to pass away, right? Do they take a negative view, glasses half empty, or do they take glasses half full? That's what we need to watch for, because it is going to affect where this goes. We're at these all-time highs. So we want to see, can it go up to this blue line? Remember what I said? Out of all of this stuff, let's go back to the very core. If I can draw two lines, I can be a stock trader. Some of you don't believe me. You need to take the step one event, because in the step one event, that's exactly what we teach you. We're going to be doing that with some folks here in Tampa. The next 2 days, we're going to have about 150 people in a room in Tampa. And that's exactly what we're going to show them. If you know how to draw two lines, you can do this. You say, Blair, there's got to be a little bit more to it than that. Well, we talked about a couple of those things today. How can I help you be a smart trader so you can protect your money? We're going to show you a couple of simple rules that you add into that, but really, you just got to know how to draw two lines. And that goes back to this. Once I find a nice, pretty pattern, which is how I like to describe it, I just got to put a couple of lines on there, and I start to know when to buy, when to sell, when to buy, when to sell, when to buy, when to sell, right? And that is your introduction to stock trading. And to me, that's the hottest thing of all in the market. Knowing what to do. And that's trading. Not knowing what's going to happen, but knowing exactly what to do no matter what happens. That is the difference between someone who dips their toe in the water and opens up a Robinhood account and somebody who learns how to trade stocks. And that is the hottest of all. That is our Stock Talk Thursday. Hot, not news, your one-stop stock shop, looking at what you need to know as we go ahead. We're at all-time highs. Do we break through? Closing at a new all-time high tomorrow? Let's watch for that glass half empty, glass half full, because there's really kind of two. Sometimes, you don't have a major negative news item. You just have a positive one. Sometimes you don't have a positive one. You just have a negative one, right? Today was a mix. So we're watching to see, well, which one wins? And of course, for those of you out there who are in our programs, you'll be following along with us as we watch that unfold, letting you know what you need to pay attention to, what you need to be thinking about. If you're joining us, you're brand new, you say, Blair, you say two lines, and I can be a stock trader. I'd like to know more. Head on over to tradeway.com. I'm going to go ahead and just pull it up real quick. That way you can see it. I'm going to stop my screen share. It's going to take 15 seconds. Share it so you can see it. Boom, here we are on the page. You're just going to go there. That is tradeway.com. I'll go ahead and pop it in the chat. And you just want to go in, click on Step 1, Start Your Journey, live virtual event. Blair, I can just do this from my computer at home? Absolutely. Absolutely, you can. Step 1, Start Your Journey. If you've never been on this before, just head on over to that. Also, for those of you who have been on before, you've done it, you say, Blair, I saw it, but I know I need more education. This gets me started, but I need more education. Go ahead, check out the memberships, right? We've got memberships, low risk for you. You get to pay a monthly fee. You can cancel anytime you want. That's the beauty of memberships. 80% of our people in our higher tier membership stay 12 months or more because they get quality. They're taking action. They're getting in the market. They're actually doing it, but they don't have to be afraid of doing it because somebody's doing it with them. Every day, somebody's doing it with them. That's the Tradeway difference. Those are the Tradeway memberships. We are going to be back Monday in Texas, 6 p.m. Central Standard for our next broadcast. That will be our Market Monday. I'll be back with you guys on Market Monday. So if you're joining us live today, or you're joining us on the recording, thank you for being on. This has been Stock Talk Thursday, and we will see you guys on Monday. Appreciate you. Thanks so much.